In our bond market moment, President Trump says he quickly saved the bond market after some investors no longer counted on U.S. Treasuries as a safe place to park money last week. Here to bring us up to date this week is Sean Dranfield, CEO of PTAM. Happy to have you on our show right now. U.S. Treasuries are usually seen as the world's safest asset. What's happening?
Well, Angie, thanks again so much for having me on today. Really appreciate your time. So the answer is yes, absolutely. They are still considered the world's safest asset. I think, though, it's fair to say that last week caused some jitters overall. Obviously, that's a combination of a few factors. So firstly, this sort of announcement on tariffs, that definitely had an impact on how markets felt about the economy. Obviously, we had some jitters in the stock market, and then we also had some jitters in the bond market, some of which had to do with the 3-year Treasury auction towards the beginning of last week that was a little weaker than normally was the case. And I think that sent the bond market into a little bit of a tizzy last week. But that being said, this week things have calmed down. I still think there's a general perception that Treasuries are perceived as the world's safe haven bond asset.
Foreign buyers have historically played a huge role in the U.S. bond market. Any shifts this week?
So I think that was one of the things that the market was speculating about last week after the jitters with the 3-year auction. But thereafter, there was both a 10-year and a 30-year Treasury auction that actually went quite well. So we're really not seeing any evidence that foreigners are backing away from the Treasury market this week. And frankly, it's hard to predict the future, but there's nothing to suggest that that's going to change on a going forward basis.
How do you think investors should think about bonds in their portfolios today?
Yeah, so as always with us, we make the argument that interest rates, credit spreads are entirely unpredictable. So our view is you want to build a diversified portfolio of bonds that may help you if rates go down, combined with bonds that may help you if rates go up. And when there are spread opportunities, certainly try to take advantage of those as well, but they may come and go, and those are similarly unpredictable.
We thank you, Sean, for the bond market insights you bring.
Angie, I appreciate you and your viewers' time, and I look forward to next time. Thanks very much.